Hi everyone, welcome back to this week's Technical Insights. Last week, we saw US and China, the two largest economies in the world, releasing their manufacturing PMI data. In the US, we saw the ISM manufacturing PMI for February, coming in at 47.8, lower than the January reading of 49.1 and below the 49.5 market estimate. This showed a more than expected pullback in February as decline in new orders, production, employment reading eased the pressure on inflation staying elevated. This led to the rally of all three major indices in the US, with the Nasdaq Composite rising to an all-time high. In China, their manufacturing PMI data fell to 49.1 in February versus the 49.2 in January, making a fifth straight month of contraction, according to the Statistics Bureau. Economists had expected a reading of 49 based on forecasts compiled by Bloomberg. A separate PMI manufacturing gauge compiled by Caixin and S&P Global Ratings, which tracked the smaller Chinese manufacturer, rose to 50.9 from the 50.8 in January. This reading exceeded the consensus estimate of 50.7 among the economists. The reports are likely to add more pressure on Chinese policymakers to respond next week when they gathered for the annual two-session meetings where economic and social targets are set for the coming year. This data caused investors to track cautiously on our STI index as we end lower on Friday. Before we deep dive further, let's recap how the market ended last Friday. Our Singapore Straits Times Index fell 6 points or 0.19% on Friday. In the Asia region, most of the market ended in the green. The Nikkei 225 index rose 1.9%, while the Shanghai Composite gained 0.39%. Hong Kong Hang Seng Index also advanced 0.47%. On the US side, the Dow Jones Index gained 91 points or 0.23%. S&P 500 added 41 points or 0.8%. The Nasdaq Composite Index was the best performer, jumping 183 points or 1.14% to an all-time high on Friday, surpassing its 2021 record, as investors bet that mega-cap technology stocks were the best way to play the slowing inflation and a coming AI boom. Chipmaker giant NVIDIA, which led the tech rally, has surged more than 260% over the last 12 months and was up another 4% last Friday as well. Facebook parent also jumped 2% on last Friday. On a weekly basis, the 30-stock Dow Jones Industrial Average is the lagger, down 0.11% for the week, ending at 39,087 points. The S&P 500, which also popped to a record close on Thursday, also advanced 0.95% for the week to close at 5,137 points. The Nasdaq Composite continued their march upwards, up 1.74% for the week to an all-time high at 16,274 points. The Nasdaq was the last of the three major indices to reach a record close this year when it achieved the milestone last Thursday. Enthusiasm over AI has lifted mega-cap tech stocks and the broader market through 2023 and into this year. Slowing inflation and the Fed ensuing pivot towards the rate cut forecasted for later 2024 have also contributed to the Nasdaq recovery from a difficult 2022. In Asia, the Hong Kong Hang Seng Index ended their 3-week consecutive winning streak, down 0.82% last week to end at 16,589 points. The Hang Seng Tech Index meanwhile defied the drop in the Hang Seng Index and jumped 2.6% to finish at 3,488 points. Analysts have expected more support measures to come out from China's annual legislative meeting this week, where the National People's Congress will convene on Tuesday in Beijing. For the week, our STI index is down 49 points or 1.54% to settle at 3,135 points. This is the second consecutive losing week for our STI index, following the 1.1% decline we saw last week. The consecutive weeks of pullback were due to a series of disappointing earnings that missed analyst consensus as well as market expectation. Major STI components like the trio of local banks as well as SGX also ended the week in the red. The biggest winner on the STI last Friday was Seatrium. Their shares jumped half a cent or 5.56% to close at 9.5 cents. For the week, Seatrium shares were up 2.15 cents. And the biggest winner for last week on the STI index was YangZiJiang Shipbuilding, rising 7.83% for the week to $1.79. So for this week's technical analysis, let's look at both of these big winners on the STI index. First, let's take a look at Seatrium. Last week, Seatrium announced their second half results on Monday, where they reported a loss widening to 1.7 billion and also proposed a 20-to-1 share consolidation to X their penny stock status. The share consolidation will be beneficial to both the company as well as the shareholder by reducing market volatility and help boost market interest in Seatrium shares. So this could be one of the reasons for the bounce in Seatrium share price, and Seatrium's order book outlook for 2024 also seem pretty bullish, with some brokers maintaining their buy calls with target price around the 15 cents level. Looking at Seatrium's price chart, their share price has been on a downtrend after a double top formation in July and September last year. In the slight last few months, Seatrium share price hit a low of 8.5 cents in early February and rebounded to a high of 10.4 cents in late February. When Seatrium share price hit a low of 8.5 cents, the RSI breached the 30-point mark and touched a low of 20 points. The RSI has now recovered to 48 points, just 2 points below the 50-point neutral mark. And if the RSI breached above the 50-point neutral mark, the uptrend momentum may accelerate further. On the MACD indicator, the MACD line crossed above the signal line on 20th February, a day before Seatrium share price rebounded to the 10.4 cents high. The crossing of the MACD line above the signal line indicates a possible change in direction of the downtrend. A secondary trend may be developing in Seatrium's prevailing downtrend, with the upper bound of that downtrend around the 100 days moving average in the blue line that you see here at 10.7 cents. If the RSI were to gain further momentum above the 50-point neutral mark, Seatrium share price may test the upper bound of that downtrend at the 100 days moving average at 10.7 cents. Next, let's take a look at YangZiJiang Shipbuilding. Shares of YangZiJiang Shipbuilding rose last Wednesday after the company reported higher profit and sales, also raising the guidance for new order wins in 2024. The shares rose 3% on that day to $1.72, lifting the year-to-date gain to 15%. The Jiangsu China-based shipbuilder said on late Tuesday that the net profit in the second half ended December rose 65% from a year earlier to 2.36 billion yuan, with gross profit and margin helped by lower costs for raw materials, particularly steel, and a favorable exchange rate. DBS analysts said in a research report that the company profits beat expectations amid strong shipbuilding margin expansion, adding that business momentum is likely to continue in 2024, with the year-to-date new orders already at $1.35 billion. DBS reiterated a buy rating on the stocks and said it will review its current target price of $1.90. Looking at YangZiJiang share price, the share price hit a low of $1.37 in October last year and has since been on an uptrend. The intraday high that was touched last Friday at $1.80 was actually higher than the high that we see in August last year at $1.79. After hitting the high in last August at $1.79, YangZiJiang Shipbuilding share price pulled back to the low of $1.37 in October. The MACD line was also seen diverging upwards away from the signal line, an indication of further upside momentum. However, the RSI has reached the 69-point level last Friday, just 1 point short of hitting the 70-point overbought mark. YangZiJiang share price has also breached the upper bound of the Bollinger Band in the white line over here. Given that YangZiJiang share price has been on the uptrend for the past few months since October last year, when the RSI hit above the 70-point overbought mark, we may see a short-term pullback before the resumption of the uptrend on the longer term. The first support if a short-term pullback happens will be the 20 days moving average, which is the basis of the Bollinger Band, currently now at $1.67. Followed by the second support level at the 50 days moving average, which is the amber line that you see here at $1.61, before we see the resumption of the uptrend again for YangZiJiang share price. And these are the updates that I have for this week. Do remember to like, share, and subscribe, and let us know in the comment section below which stock you would like us to analyze next. And I'll see you again next week in the next Technical Insights.